Good afternoon, everyone, and welcome to Unlock the Stock with TWK Investments, our first repeat client. A special welcome to Andre Myburgh, CEO, and Eddie Fivers, CFO of TWK Investments, who will be taking us through the presentation. Unlock the Stock is specifically formulated for retail investors to gain access to corporate management and get to know them and their companies better. This event is sponsored by Keyter Insurance and FX, an FX intermediary and insurance brokerage for niche markets, which include bloodstock, sport horse and game insurance, as well as household, vehicle and commercial insurance. Whether in the insurance business or FX, Keyter is involved in matters that affect people's lives. Keyter Insurance and FX is always in your corner, and you can visit their website www.keyter.co.za to meet the team and read more about their service offering. This platform will not be possible without our technology partner, Lumi Global. You can visit their website lumiglobal.com to find out more about their various integrated online AGM and investor presentation solutions. Our hosts will be the Finance Ghost and Mark Tobin from Coffee Microcaps, and they will be facilitating the Q&A at the end of the presentation session of this event. Before we commence, a couple of housekeeping rules. TWK will do a short presentation, and please note that you will only be allowed to post your questions by typing them into the chat function at the bottom of your screen. This event is being recorded and will be available on Keyter Rech Investor Solutions YouTube channel, so be sure and subscribe to this channel. During the Q&A session, you will see an email address, and if you would like to be added to that company's distribution list, please make use of the email provided. I now hand you over to Andre Myburgh, and could you please share your screen with us?
Thank you very much. Sorry about that. It's Kremlin on our side. But just looking at the highlights of our financial statements, first of all, looking at the revenue, our revenue is up by 17.79% from 8.45 billion to almost 10 billion, 9.96 billion. Our EBITDA is also up 27% from 527 million to 673 million. And then I think very important to shareholders, always the profit after tax. It's up by 41% from 256 million to 362 million. And then very important is our HEPS, our headline earnings per share. That's up by 45%, and that's a huge achievement for us to have a 45% increase on that, from 595 cents to 863 cents. Our net asset value is also up by 13% from 46.36 to 52.55. And also our cash flow operating activities before our changes in working capital is also 39.5% up from 384.6 million to 535.9 million. A lot of this cash is also being went into our working capital, and Mr. Fivers will show you also where this cash went into some of our inventory and debtors as well. TWK reported another solid set of results for the year ending. In fact, it's not just a solid set of results, it's also one of our best performing to date, so it's just another year of good performance for us, and we also have another record year with financial performance like we have for the last few years. And that was mainly due to a substantial increase in our wood export, supported by high pulp prices, as well as expanding TWK's overseas timber market. The pulp price is always important for us because we're selling wood chips that's been used in pulp production. But it's not always only the pulp price. The pulp price has come down a bit, but it's stabilized, and I think we think that it's going to be on these levels for the year going forward. But it's also about the supply and demand of wood chips, and one of the bigger suppliers is Australia, and they are sitting with a declining volume because a lot of their forest is been moved to other agricultural activities, so they're losing forestry. So they are supplying less than in the past. And also, if you're looking at the high demand last year, Vietnam is the biggest supplier of wood chips, and their supply was year on year increasing, except last year was the first year it stabilized, and even with the high demand, they didn't supply more. So that means that they have reached their maximum capacity of supplying. So this supply and demand is under pressure, and that's why we're definitely going to have an increase in price in the new year. That's very good signs for us. We also have excellent agricultural trading conditions. We're benefiting the retail and mechanization segment. Once again, our primary producers had a very good year because of the high commodity prices. This year, it's going to be a little bit less margin for them, in that also the input cost has risen considerably, but still the commodity prices is good, and we think that they're going to also have another good year that's lying ahead if you're looking at the weather conditions and everything. We improved new vehicle sales despite the increased industry shortage, outperforming the average NASA statistics. It's also important for us to measure ourselves in that segment against NASA and what's NAMSA and what's happening there. And we have very good sales even on the new vehicles, although there was a lot of shortages and we couldn't get all the models and everything, but we still had good sales there as well. And then overall, we had favorable trading conditions across all our businesses. TWK disposed of 2 total filling stations in the Westleton shopping center during the year under review. We also sold Protea tyres to management effectively from 1st of September. And we also have Roospace, the renewable energy business, that we classified as assets held for sale. The end of every year, or every year, we have a look at all our businesses and the assets we have, and we review them to make sure that we're getting the return on the capital employed there. And if we look at them, and that's why we make the decision to say this is not really some of our core businesses, and we can utilize that capital that's employed there better in our core businesses to generate better returns on that as well. And that's why we have looked to sell some of those assets. And then the group's financial position remains solid with strong cash generation. And I'm going to give you over to Mr. Fivers, who can tell you a little bit more about that.
Thank you, Andre. Ladies and gentlemen, also a warm welcome from my side. Thanks for attending this presentation. We're going to use this time to tell you more about TWK and also to reflect on the financial performance of TWK during the 2022 financial year. As Andre mentioned in his introduction, that we not only achieved the best financial results on record during our 2022 financial year, but that we also outperformed the previous record, which was the 2021 year, substantially. And we strongly believe that this paved the way for stronger growth going forward. If we look at the revenue growth year on year, the 5-year compound annual growth rate is at 7.39%. We've achieved the 17.79% growth in revenue from 2021. It's at 9.96 billion rand in 2022. If we look at the EBITDA, also the 5-year compound annual growth of 13.9% at 673 million. That's up by 27% from the previous financial year. Also year on year good growth. Our profit after tax, the 5-year compound growth of 21.3%. It represents a 42% increase from the 2021 financial year. And like Andre already mentioned, the headline earnings per share up to 8.63 rand from 5.95 rand, with a compound annual growth of 14.46%. The financial performance was really driven by very good timber volume sales, especially from the export side, fertilizer prices and margins on fertilizers, also market penetration in KZN, and revenue growth also because of inflation. There was also good operational efficiencies in all our operations, and the full year inclusion of our Peak Timber operations, which we acquired during or on March 2022, also supported profits and margins during the year. If we look, total equity increased by 17.56% for the year to 1.9 billion. The net asset value per share also year-on-year growth for the financial year, up by 13.36% to 52.55. And then our gearing ratio, we've managed to reduce it during the financial year to 145.9%. The increase in 2021 was mainly due to the acquisition of the Peak Timber assets. Also the increase during 2022 because of the increase in our total debtors book and also inventory levels. But even with that, we've managed to reduce the gearing level by a few percentage points. The share price year-on-year growth since we first listed. Share price on year end was at 51.50 rand, up from 35.10 rand at year end August 2021. The dividend declared by the board, 1.50 rand, payable on 5th of December 2022. The dividend up by 32% from 1.14 rand in August 2021. The dividend cover on HEPS a bit higher than the previous financial year, from 5.2 to 5.8. But just remember the good increase in the total dividend that we pay by 32%. So we still think it's a good dividend, and we've made a decision to maintain some of our cash for the great growth opportunities and the pipeline of opportunities that currently exist and that we investigate and look at. If we look at the cash flow movement for the financial year, we started off with positive cash of 235.7 million. Operating cash generated during the year was 671 million. Net working capital outflow of 290 million, really driven by an outflow of inventory levels of 346.7 million, and also an increase in our total debtors book of 229 million. We've sold some of the harvest of the biological assets, an inflow of 161 million, and creditors inflow of 125 million. Then we've paid the taxman 116.5 million, finance cost 184.7 million, and the net purchases of property, plant and equipment of almost 195 million. Biological assets planted during the year 203 million, and the net proceeds from sale and purchases of businesses was in net inflow of 31.9 million. That was cash from the sale of the Protea Tyres business and also the sale of some of our fueling sites, but then an outflow of additional 10% share in Sunshine Seedlings, and then also the addition of the insurance agency EUM business during the year. The net inflow of loans during the year was 318 million. We've paid dividends of 50.9 million, and that leaves us with cash at the end of the financial year of 218 million. The inventory levels at year end was on the higher side as normal. We've prepared ourselves for the increase of volumes to wood chip exports to our markets. During October, we've already exported 4 shipments to our clients, and during November already 2, and the third one is on its way. That will reduce our inventory levels dramatically, and also improve liquidity further. If we look into the different business segments of the TWK group, we've got 5 segments, namely the timber segment, retail and mechanization segment, the grain segment, financial services, and then also the motors and tires segment. This is a chart just showing the contribution of all the different segments of total revenue and also total EBITDA. From the pie chart, you will see that the revenue contribution from the trade division increased in terms of revenue from a 47 in total to a 51% total contribution of revenue of the group. In terms of EBITDA from the trade division, an increase to 51% in total from the 46% in total the previous year. From the timber segment, the contribution to revenue stayed flat, but an increase from a 46% contribution to EBITDA to a 51% of EBITDA during the 2022 financial year. We expect the contribution to EBITDA from the timber division to increase in the new financial year. If we look into more detail in our timber segment, the revenue increased by 16.65%, mostly due to improved sales performance in the wood chip exports, also lumber sales, and also increase in the treated pulp products. This was supported by the weak rand during the financial year, especially on our exports, and then also the sales volumes from the big timber acquisitions that we've done last year also supported revenue and also profits. Total sales volume have improved substantially from the previous financial year with a 61.8% to 1.4 million tons due to the increase in international demand for wood chips. We see that demand is still there and expect even more sales during the new financial year. So exports for the financial year was at 634,000 tons compared to 336,000 tons the previous financial year. That represents an increase of 88.5%. That's there's still a big increase in demand for pulp, especially to Japan, also China. We also experience additional demand from Europe because of Russia not able to supply to that market. We believe that we will be able to maintain those markets in the future. The expectation is that we will be able to export around about 900,000 tons in the new financial year, and that's also the maximum capacity of our wood chip export plant down in Richards Bay. EBITDA increased by 18.67% as a direct result of the increase in revenue and exports. EBITDA margin also increased from 14.67% to a 14.93%. The influence factors there was the international pulp prices that remain high and the demand is robust. There's an increased demand for wood chips, like I explained just now, to Europe, and then also better efficiencies that we receive from our big timbers operations. If we look into the retail and mechanization segment, revenue increased by 27.7%. That's really another record year for the retail and mechanization segment. There was good trading conditions in the general retail segment. We gain also good market share, especially in KZN, and not only commercial farmers, but also emerging farmers that we've gained market to during the financial year. In terms of our Constantia fertilizer facility, we reported strong set of results there as well, due to the increase in fertilizer product prices, given the global fertilizer ingredient supply shortages, mostly due to the Ukraine crisis. We did experience a decrease in total volume sales of fertilizer. It's down by 26% from 283,000 tons in 2021 to 208,000 tons in this financial year. It was mainly driven by the farmers who were able to reduce their applications, but that's not really long-lived or possible to do it for a long period of time. It's really only possible to do it for one application. So we expect the farmers to increase their applications in the new financial year, especially because we see the fertilizer prices coming down. So the prices will be lower, our revenue will be lower in terms of fertilizer prices and also margins, but again, we expect higher volumes in terms of fertilizer sales. On the mechanization side, through our New Holland agencies, we've increased total unit sales by 37.3%, and we sold a total of 210 units during the financial year. Also a trend that we expect to be maintained during the new financial year. EBITDA increased by 51.6%, with EBITDA margin also increased by 4.5% from a 3.83% the previous financial year. The influencing factors I've already touched on. Was basically driven by the fertilizer shortages and the possibility to increase margins. We expect that this will soften the prices and margins during 2023. The agricultural sector experienced margin pressure with rising fuel prices during the financial year, as the input costs, especially fertilizer and fuel, increased, but it was countered by high grain prices and also yield. We expect a good season for the producers as well in this new financial year because of high commodity prices and also the expectation of good rain. If we look into the grain segment, as a result of lower grain storage in the silos, the silo facilities, and also animal feed sales volumes, that was down. Revenue decreased by 0.46% to 1.7 billion rand. The grain storage business stored less grain than in 2021, and that's a reduction of 17%. That was really due to the grain moving directly from the farms to the mills. However, we were able to market some of those grain and benefited from that, but unfortunately, we didn't have the opportunity to store those grain and benefit on the income from that side. The grain marketing business therefore reported an increase in tonnage marketed and benefit from the higher average grain prices. Our Arrow Feeds business in Eswatini reported a decrease of 10% in volume, given the high prices of grain and also the outbreak of avian flu in the areas. EBITDA increased by 7.88%. EBITDA margin improved by 2.9%, and it was really driven by better marketing from the grain marketing division. We look into the financial services segment. Revenue increased by 21%, and EBITDA also increased by 1.52%. Revenue at 220.3 million, with EBITDA at 89.5 million. The lower EBITDA growth was mainly as a result of an increased provision for bad debts. The insurance division also reported excellent growth, 8.73% growth in short-term insurance premiums, that resulted in an 11% increase in commission income. Also, a 4.87% increase in total crop insurance premiums. That resulted in a 2.6% increase in commission income. That despite of a 2.23% decrease in crop hectares insured. The medical insurance portfolio also continued to show good growth. Commission income revenue grew by 41.75%, and also the life insurance business grew by 44.7% for the year. The credit division reported net interest growth of 21.6%. The higher grain plantings, higher input costs for farmers, as well as our market share penetration, as I've explained a bit earlier, gave rise to the increase in our total credit or total debtors book. The total production credit book grew strongly throughout the year and peaked at 808 million around about March, February. Last year, the peak was at 544 million, but we've closed at 391 million at year end compared to 318 million the previous financial year. Our last division is the motors and tyres division. Revenue from continuous operations increased by 7.66%, and that was mainly driven by a 26.3% in overall increase in vehicle sales. There was a 22% increase in new vehicle sales during the year, but a decrease of 3.1% in used vehicle sales. There was also a decrease of 14.6% in total litres fuel sales, from 15 million litres in 2021 to a 13.3 million litres in the previous financial year. It was really driven by the high record fuel prices during the year, and also the floods in KZN that hampered the delivery of fuel. But also we've sold some of our fueling sites during the year, and that also impacted total volume sales during the year. EBITDA from continuous operations in this segment decreased by 30% due to the reasons mentioned under revenue. EBITDA margin at 4.19% compared to 6.4% the previous financial year. We've decided to discontinue some of the operations held for sale, 2 total filling stations. Subsequently to year end, those was already been sold. We sold the Wesselton shopping centre. We've also sold Protea tyres during the year, effective 31st of August. And then the roof space renewable energy business is also classified as held for sale. I will now hand it over to Andre for outlook and strategy.
Thank you, Eddie. I think it hopefully makes everybody very excited to see the figures and how the graph is going in the right direction. But from our side, TWK is very optimistic about the outlook for South Africa. And I know there is problems, and we have to overcome some hurdles in about a lot of things in South Africa, but we are very optimistic, and we definitely believe that the opportunities that is much more than the obstacles in South Africa. And I think it depends on how you look at it, but we believe there's a lot of opportunities in South Africa, and we're going to utilize that opportunities. The timber business progress are good, and agricultural outlook, despite challenging macroeconomic conditions, remain positive. And I think you've already seen that the demand for fiber is high, and we believe that it's a green energy also in Europe, and it's definitely going only to increase in future as well. So that's why we are very positive about our business, and also about the agriculture as a whole. You know, commodity prices that is high, and also if you're looking at the conditions at this stage, rainfall and so on, it's very positive. With the disposal and sale of the certain businesses, TWK is well positioned for growth going forward. And I think we are planting trees and growing trees, and I think most of you also know that if you want to make a tree grow better, you have to prune it sometimes, and that's also what we're doing. We're also busy pruning our tree and making sure that it's growing much faster and better than it would have if we're not pruning it. TWK is also always looking for opportunities, and we're looking for expansion through acquisitions, mergers, and also strategic alliances. But we also be very careful of how we invest our capital, but we're definitely going to expand. That's also why we're keeping some of the cash, and we're also pruning some of our businesses. We also continue our efforts to optimize in existing offerings by looking at innovative products and services throughout our business. I think that's very important to always what you have to improve on that and make it better. Then, of course, strategic outcomes, like I already said, are evaluated annually to ensure sustainable growth for a group. That's how we make sure that we keep that graph going on the right direction of growth. If we're just looking quickly at our strategy, it's very important that if you're looking at the strategy, our values is embedded in our strategy, and that is strive, growth, renew, sustain, conserve, and develop. That's very important. That is also part of our strategy. If you're looking at first the stakeholders, the customer is always very important to us, and we're focusing on our customers. And there we strive to be the supplier of choice. We want to be giving the inputs to our clients, and then also we want to be the market. We want to be the off-taker of the products that's being produced. Achieving sustainable growth with our customers as well as our communities. We cannot be sustainable if only we grow. Our customers as well as our communities have to grow with us, otherwise the growth wouldn't be sustainable. So looking at financial performance, we definitely want to be the investment of choice, and I hope that's why you're also here today to see what we can offer, and we want to be the investment of choice. And how we're going to do it? We're going to do it through the creation of shared value, our entrepreneurial spirit, our commercial experience, focusing on innovations as well as technology and ongoing process optimization. Then if you're looking at process excellence, then managing and optimizing processes excellence and organizational effectiveness is very important to us. Then you can have the best strategy, but you have to have the people to do that, and you have to have the buying of the people. So it's also part of the strategy, people and transformation. First of all, we want to be the employer of choice. We want people to be wanting to work for TWK. And then, of course, to ensure that talented people and intelligent technology are the building blocks of our future success. So that's, in a nutshell, our strategy. At this stage, it's working quite well for us. Thank you very much.
Thank you, Andre and Eddie. We will now go into the Q&A session. And as a reminder, you can post your questions into the chat box at the bottom of your screen.
Okay, thanks, Marlies. It's Mark Tobin here. I'm going to lead off with the first question. I just want to get an idea of how the impact of exchange rates impact the business, because you know, on one hand you're selling, you know, the wood chips, I'm guessing, are priced in US dollars with a rand cost base, which is good. But then on the flip side, you know, you're importing fancy New Holland tractors when you've got like a weak rand, and obviously that much translate into higher prices on this side. So in terms of, maybe one for Eddie, you know, is a weak rand overall good for the business, or is a strong rand overall good for the business?
Thanks for the question. So on the short run, is a weak rand for TWK favorable because of the exports, and our prices to the farmers is mostly fixed, where we buy the raw materials, and also the prices to our customers for the short-term exports are fixed. So if the rand is weak, we obviously generate more income. To put into perspective, if the rand weakened by around about, or by 50 cents, the revenue in average for a year, like the past year, the total revenue will increase by 30 million, and that will probably give us around about 4 to 5 million extra profits for the year. So short term, definitely a weaker rand. In terms of a weaker rand, we normally are able to give the higher prices to the farmers in terms of fertilizer prices, but all in all, for the country and for TWK as a whole, I think a more stable rand will be better. But short term, we smile if the rand weakens.
Okay, great.
All right, let me jump in. Andre, Eddie, thanks for your time today. Thanks for bringing the TWK story to the retail investors. I think it's a really cool business, and it's good that people learn more about it. So one of the questions that came in is very much in line with something I wanted to ask you anyway, which is, I think you talked about pruning the trees earlier, which I thought was a very cool analogy. But, you know, in terms of pruning the businesses you own, you know, you've sold off a couple of businesses. There was Protea Tires, there was the Roof Space Rental Group that I think is now sort of held for sale. There were a couple of petrol stations. How do you think about why a business is non-core? Is it a return on capital thing? Is it a strategy thing? I just think in a business like this with a variety of operations, people always like to understand how you think about that.
If I can answer that, I think it's really a combination of return and strategy looking forward. And I think it's really two aspects that, you know, is hand in hand. So as a management team, it's our responsibility to maximize the return on investments to all our stakeholders and ensure the immediate but also the long-term health of TWK. Part of our success story till now is really the diversified business model of TWK. And like any other large organization, TWK do have a portfolio of different segments and also products, and some of them are successful and others not so much. And on a yearly basis, during our strategic planning sessions with management and the board, we measure all these various segments in buckets individually to determine which one should we invest, or could we benefit if we invest, and which one should we rather disinvest in. So factors that we take into account is our strategy going forward, growth potential of that business, our market share in that business, resources available, and also, you know, the sustainability of the specific business. We then categorize them in their buckets. The stars, like the timber, we grow and we keep them. The cash cows, we just keep a close eye on them, and then when the dogs we sell. So during the year, and it was clear from the previous financial years that we really struggled with the fueling sites. and therefore we've decided that that's fall under the dark category, and we sell it. The Protea tires, we saw that as not part of our core business, only a small market share in that segment, and therefore the decision to sell. In terms of our solar energy business, I think it's a good model. There is good potential for the right investor in that specific model, but we realize that we can utilize that capital more effectively, especially with growth potential that we see in the near future in terms of value-adding products in the timber segment, and also the potential to grow our own plantations. And therefore, the decision to unlock that capital in that segment, or in the renewable energy segment. And we also think we will have a better benefit if we can utilize that cash and add those solar to our own plants. That way be more effective in our own plants and generate more income. So that was really the principles on how we've made those decisions to disinvest in those businesses.
Well, makes a lot of sense. Thank you.
I'm going to take one from the audience here quickly. Question around the flexibility in supplying wood chips to meet this increased demand from the plantations. Is there a bottleneck in terms of, we know all about the port constraints with Transnet? Is that a bottleneck, or at some point there obviously must be a finite amount of stock, given it is a tree that needs to grow, that then needs to be turned into wood chips. We're just trying to get an understanding of how much of this demand you can fill the gap with in terms of supply from South Africa.
Yeah, I think if I can answer that, is at this stage, we have, unfortunately, is the road. The moment, if you cannot do it, the most cost effective is definitely by rail. But if rail is not working, then you have to go with road. So yeah, we definitely have, and we're going to utilize our plant capacity at the fullest. So at this stage, it wouldn't be a problem to get the timber to the port where our chipping facility is, and we can definitely fill that gap. But you must also remember, it's not a gap for a very, very long time in future, because we also have our own pulp mills through Sappi and Mondi. So this is, and they also expanding their mills. And we also at this stage already selling a lot of our products. It's all about transport, who's nearest to their mills for pulp and so on, that we're selling to them as well. In future, we're probably going to sell more to them than export. So it's not that we're going to invest a lot of money in the port to upgrade quickly for international market. We would rather support South Africa as well if we cut the prices in South Africa.
And if I can add to that, like I mentioned earlier, that we do have the orders for our export customers of 900,000 tons, and that's the maximum capacity of our facility down in Richards Bay. And we will be able to fill those orders during the year. I think as South Africans, we are able to make plans and move quickly, and that's what we as TWK also like to do. So we will get the timber at our facilities. And also, like I mentioned earlier, that we've already exported 6 shipments during the financial year. So we get our products out. It is more difficult than in the past, but we just try to make plans and be more effective to get our products out.
Okay, thanks.
Question just coming now from the audience around Africa. So any plans from your guys' side to expand further into Africa? Obviously, some investor interest there.
So we always look for opportunity in Africa as well, but we're also very cautious about investing in Africa, and we have looked at quite a few projects. At this stage, we're only Eswatini, that's almost the province of South Africa, but this is in Africa, and we're doing very good business in Eswatini. That's our neighboring state. But yeah, we're always looking, but not at this stage. We haven't got something fixed, but there might be possibilities because it's always your risk reward if you invest in Africa, and we are very aware of all the risks that's involved with that and how you're going to manage it. But there is opportunity always in risk as well. But we are very cautious investing because it's normally a lot of money that you have to invest if you're looking at timber.
And I think the pipeline of potential investments in South Africa is enough to keep us busy at this moment.
Yeah, we have opportunity in South Africa as well. So, but we will definitely always look at Africa because there is opportunity.
Yeah, if I can make one last comment on that before I hand back to Mark. It was really cool to see in the outlook slide, definitely some South African optimism there. And there's tons of opportunity in South Africa, and it's a market that everyone is most familiar with. So I think that does make sense. Africa is interesting, but you don't have to look far to find examples of companies that have lost a lot of money by trying to go into foreign lands. So yeah, it's good to hear. Okay, Mark, back to you.
Thanks. Just on the non-core asset sales that are, going to reach financial close over the next couple of months, I presume. What's going to happen to the cash that's going to come in from that? Is it going to be, redeployed into expanding the remaining divisions, a special dividend, perhaps, getting, some debt off the balance sheet, combination of all three? What's the kind of current thinking from the board and management of, redeploying that cash once it comes through?
Yeah, no, that cash we definitely going to use for growth opportunities. Like Eddie also mentioned, there is already a pipeline. We can invest it. We've just bought now. Ruddermans is a retail business in Nelspruit and Hoedspruit in Mpumalanga. So we already bought that. We take it over the beginning of this month. So we definitely going to utilize that money in growth opportunity within our core business more, that we can add value to some of our products as well. And we definitely going to try and get better returns than we had in the past on that capital employed. So we definitely going to use that because we are quite focused on growth and expanding, and that's definitely where it's going to go. That's why we're also a little bit with our dividends. We don't want to pay out too much because we have to finance our growth.
And I think with that, it's then more sustainable growth for the future. And with that, we will be able to, on a year-on-year, pay better dividends.
I can get one more in my side. So obviously KZN is a very important province for you guys. And we know KZN has definitely had a few years of pretty awful luck. Tongaat is kind of the latest story in that, from the outside looking in, I'm the furthest in from an agri expert. You kind of look at this and wonder what the knock-on impacts potentially are from something like, Tongaat being in business rescue. It's obviously a pretty big part of the KZN economy. Just any comments around, your direct, indirect exposure, how do you think about this?
On the direct side, we don't have any exposure to Tongaat directly. Indirectly, a little bit, and I think it's not only Tongaat. It's actually the sugar business as a whole. Even Illovo, they're cutting back on the intake from farmers of how much they can deliver to the mills and so on. So it's more a sugar industry than only just Tongaat. But from our side, indirect exposure. Our clients is mostly not only sugar farmers. We've got more the diversified farmer that also have cattle and have other crop as well. So we are not, as such that we are only, that the Tongaat and the sugar is going to have a big impact on us. And actual fact, I think there's a big opportunity for us, and we're looking at opportunities at this stage. So I think Tongaat is what's happening there, and what's happening in the sugar industry is creating opportunities for us. And we're looking at certain opportunities at this stage. So it's more of an opportunity than perhaps that it is a risk for us at this stage.
And then Can we just have a comment on supply chains in terms of, the semiconductors and, what you called out them? Are you seeing that starting to normalize, or is it still a complete mess post-COVID? Is there any kind of green shoots in terms of lead times coming down, and not having to order so much in advance because you're struggling to get stock, so we're like, okay, well, whatever we can get, we'll take.
Yeah, and that's also a part of our inventory going up, especially on the retail side. Now, it's definitely improving. There's definitely a huge improvement, although we're not back to where we was before COVID. A lot of the supply chains, specific products, it's sometimes it's not an industry. Sometimes it's only a product in a product line that's problematic. But most of it is getting better, but we're not near where we should be. But it definitely is becoming much better than it was in the past. The supply chains is getting much better.
Okay, so we should hopefully start to see that impact coming through in working capital. I won't say in the next 6 months, but let's hope in the next 12 to 18 months, you can get back to holding, let's say, normalized stock levels and normalized lead times to go ahead.
Yes, yeah.
Well, Liz, can I sneak one more in? We've just gotten it from the audience. Literally one more, and then we're out of time, I think, before I get shouted at. So the question is from someone who's been noticing comments on the livestock component of the business in previous presentations. So the question is just around how large is that? What are the plans for the future? Is it still there? It's just obviously something that's come up in previous presentations.
Yeah, livestock is still a big part of agricultural business, and especially in the upcoming farmers, they have the biggest herds there, and it's about educating a lot of those farmers to look better after their cattle and making sure that they received all the necessary things that help them improve their performance. So that's definitely still a big part of the business in agriculture, and I think that's going to stay that way, because meat is very important for the whole of our country as well as the world. We have to have meat, and especially in South Africa, we have high consumption of cattle meat. So definitely there's going to be a big part, although it's not the revenue like you have in the rest of agriculture with maize and so on, but still it's going to be a big part of agriculture.
Right. Well, thank you to everyone who participated in Unlock the Stock today. And a special thank you to Andre and Eddie for making the time to support this retail investor platform. We hope you have enjoyed this event. And if you would like to listen to it again, it will be on the TWK Investor Solutions YouTube channel. Please join us for the next session of Unlock the Stock event on Wednesday, 16 November, where you can learn about Equate's property fund. So please look out for the invitation. Goodbye.